Hello, and welcome to the Roundtable, Advancing Housing for Native American Tribal Members. Before we get started, I want to go over a few housekeeping items. This session will be recorded. All lines have been muted upon entry and will remain on mute to prevent interference. If you have any questions throughout the presentation, please enter them in the Q&A box by clicking the three dots located at the bottom right-hand corner of your screen. Once the presentation concludes, recording will end and we will conduct our Q&A session. To ask your question live during the Q&A session, please use the raise hand feature on the control bar at the bottom of your screen. After the call, there will be a pop-up for the post-event survey. Please complete the survey before exiting the platform. Furthermore, a copy of today's presentation will be made available. More details are to come. We are joined today by Tani Brunch, Executive Director of Lakota Funds, and Freddie Mac's very own Catherine Houlihan, Affordable Lending Manager, and David Westfall, Affordable Lending Senior, both from the single family business. In today's session, we will cover a variety of topics. However, we will begin with a few remarks from Tani. Thank you, Tani, for joining us today. The floor is yours.
Good afternoon, everyone. On behalf of the South Dakota Native Homeownership Coalition and Freddie Mac, I'd like to welcome you to today's webinar to learn more about Heritage One, Freddie Mac's new conventional mortgage loan product for Native Americans living in tribal areas. I am Tani Brunch. I am the Executive Director of Lakota Funds, a Native Community Development Financial Institution serving the Pine Ridge Indian Reservation, and the Fiscal Agent of the South Dakota Native Homeownership Coalition. I also serve on the coalition's board, and I am the chair of Lakota Federal Credit Union, which is the only federally insured financial depository institution on the Pine Ridge Reservation. Before we get started, I just want to take a minute to thank the entire team at Freddie Mac for the work they have done to get all of this to this point. It's been a heavy lift. The South Dakota Native Homeownership Coalition has had a 5-year partnership with Freddie Mac, and we've appreciated the time and attention they have taken to get to know our members, which includes tribes, tribally designated housing entities, Native and non-Native CDFIs, other lenders, our state housing finance agency, the South Dakota Housing Development Authority, residential real estate professionals like contractors, appraisers, and inspectors, federal and state agencies, and more. The folks at Freddie Mac have traveled to South Dakota many times over the past 5 years to visit our Native communities. For the past 2 years, the coalition and Freddie Mac have co-hosted a lender symposium, which has allowed us to strategize about the opportunities and nuances that exist in the mortgage market in tribal areas. Personally, I'm very excited about the work that we did to address issues around appraisals. Because we don't have enough comps in our communities, we explored ways to educate our local appraisers about using the cost approach method to valuation. Not only did Freddie Mac get that, they also forged a partnership with the Appraisal Institute to take what we learned in South Dakota to the national level. Now there is a new course that the Appraisal Institute offers on appraising land in Native communities. Freddie Mac's commitment to learn about this market doesn't stop with 9 tribes in South Dakota. They've worked with many other Native organizations, including the National American Indian Housing Council, the Federal Reserve Center for Indian Country Development, Owista Corporation, which is a national intermediary for Native CDFIs, and the Native CDFI Network. I am absolutely thrilled to see so many lenders signed on today to learn more about the new Heritage One product. Before I turn the program over to my colleagues, Catherine Houlihan and David Westfall with Freddie Mac, I want to say one more thing to the lenders on the call. Please don't underestimate the business opportunities in our communities across Indian country. Our tribal economies are growing, and so is our young Native population. We have young professionals, retired veterans, and other qualified borrowers who want to return home to become homeowners so they can have a safe and stable place to live, just like many Americans across the country. Yes, we know there might be a few more steps in the mortgage lending process in our communities, but don't let that discourage you. You lenders don't have to be the experts in the lending process on tribal land. Rely on your local partners, the local native CDFIs and others who with their expertise are able to help you navigate the process and address your questions and concerns. What we need you to bring to these partnerships is access the liquidity of the secondary market so that we can collectively bring more lending capital to Native communities. Thank you for being here to learn more about the opportunity to do just that through Freddie Mac's Heritage One. Okay, let's learn more about the product. Kat and David, thanks again for your partnership and all of your hard work. And I'd like to turn it over to you both for your presentation, followed by a chance for webinar participants to ask questions. Thank you.
Thank you so much, Tani. And thank you to the South Dakota Native Homeownership Coalition for your help over the past couple of years in developing Heritage One. So good afternoon, everyone. My name is Catherine Houlihan, and most people call me Kat. So feel free in the Q&A to call me Kat. I am an affordable lending manager, as Imani had mentioned, with our Freddie Mac team. And I am joined by my colleague, David Westfall. We want to thank you again for joining us for our presentation on our new mortgage product for supporting Native home ownership, which was released to the public this summer. We named our new mortgage product Heritage One Mortgage, and we're really, really excited to share with everyone the details ranging from borrower and land eligibility to lender and borrower benefits. So we welcome everyone and thank you for joining. And the topics that we will cover, for those who may not be familiar with Freddie Mac, I will first provide an overview of the secondary mortgage market and how it works with lenders who work with borrowers. I'll then introduce our new Heritage One mortgage product by sharing the key benefits to borrowers and lenders, as well as who is eligible for Heritage One mortgages. I'll then pass it over to David, who will discuss our Heritage One mortgage product features, and then I will cover its servicing requirements. At the end, we'll open it up for Q&A and feel free to ask anything and everything that may be on your mind. Next slide, please. As we considered entering the Native market, Freddie Mac worked closely with stakeholders across the ecosystem to make sure that we were thoughtful and strategic. We knew it would take time, care, and collaboration to do it right. Before we dive deeply into the parameters of Heritage One Mortgage, we want to first share with you the journey from ideation to collaboration and then to development. Next slide, please. Freddie Mac recognized that more needs to be done to promote safe, affordable housing and home ownership in tribal areas. We made that a focus of our Duty to Serve program, which is in its 6th year. We forged relationships and worked with trusted, established organizations that support Native people and the communities where they live. Some of our vital partners in these efforts include the South Dakota Native Homeownership Coalition, OWISTA, Enterprise, and the Lakota Federal Credit Union. With OWISTA, we are supporting financial home buyer education and counseling, as well as currently training counselors to extend reach and capabilities. We also supported the creation of a Native CDFI Housing Advisory Board and co-hosted the Empowering Native American Home Ownership Symposium along with the South Dakota Native Home Ownership Coalition, excuse me. And speaking of South Dakota, we partnered with the coalition to support the Home Buyer Readiness Committee and to build an appraisal curriculum, as Tani had mentioned earlier, uniquely developed for tribal lands. And through our partnership with Enterprise, we supported the creation of curriculum, a Native Homeownership Learning Communities cohort, and a Rural Housing Innovation Summit for the Alaska Natives market. With Enterprise, we also supported the expansion of state coalitions to support tribal housing in New Mexico, Idaho, and Montana, as well as the establishment of a Native American Advisory Council. And with the Lakota Federal Credit Union, we supported the operationalization of becoming an agency-approved lender, which extends their lending capabilities. Lastly, many of the resources mentioned are now available via a dedicated page on freddiemac.com. Next slide, please. And all of that led to the point of us being ready to develop a product that will promote conventional mortgage lending to Native people living on tribal lands. We've collaborated with stakeholders across the Native housing industry over the last several years to help more people become mortgage ready. We've spent the last year and a half, almost 2 years, preparing Freddie Mac to launch a solution that would help clear away the issues and pain points related to financing homes on tribal lands that we heard directly from the market. Next slide, please. And before we jump into the details of our Heritage One mortgage product, let me start with an overview of what Freddie Mac does for those on the call who are considering entering the secondary mortgage market. Next slide, please. Freddie Mac carries out our mission by operating in the secondary mortgage market, which means that we don't lend money directly to people who want to buy or refinance a home. Those borrowers get mortgage loans from lenders from across the country, some of whom may be on this call today. Then Freddie Mac buys those mortgage loans that meet our requirements, like the requirements that we will go over with Heritage One from approved lenders. And we offer an array of mortgage products to fit market needs for those lenders. Then with money that lenders receive from us, when they sell us loans, they can make mortgage loans to additional qualified borrowers. And Freddie Mac pools the mortgages into securities. We then sell shares of securities to investors worldwide, which gives us money to be able to buy more loans from more lenders. So it's a continuous cycle of investment from borrowers to lenders to Freddie Mac to investors. Next slide, please. And in support of that process, we develop mortgage offerings, we develop and deliver curriculum, we provide technical assistance to help certain organizations build capacity to carry out their housing-related missions, and we help set industry standards. And we could not do that without our relationships, including all of you on this call. Partnership and collaboration across the affordable lending ecosystem are critical to drive business opportunities and to help make the dream of home a reality. So we appreciate your support, teamwork, and commitment to making home ownership in Indian country a greater possibility for community members. Next slide, please. Now I'm really excited to jump into Heritage One. Next slide, please. Let me start with the key benefits to borrowers that Heritage One provides. With Heritage One, borrowers can gain more home financing options and they can attain home ownership with a conventional mortgage solution. And that was our goal over the last few years when developing the mortgage product. Borrowers can also use funds from a variety of sources for the down payment, reserves, and closing costs. Borrowers can also receive a credit to offset any appraisal costs. And borrowers can make a down payment as low as 3% of the home's sale price. Borrowers will also be able to access home ownership education programs, which is required for first-time home buyers. Next slide, please. And for lenders on the call, Heritage One can help to expand your reach and grow your business by offering conventional fixed rate mortgage financing for members of federally recognized Native American tribes living in tribal areas. And we are defining tribal areas as a census tract or any portion thereof that is designated as both a HUD Indian Housing Block Grant area and a rural area under FHFA's duty to serve regulation and is identified as an Indian area in the current version of the FHFA's Indian areas file. So that may sound a bit complicated, but Freddie Mac is working internally to finalize a streamlined process to help lenders easily identify if a property fulfills those requirements. Lenders can also access standardized mortgage guidelines and guidance from Freddie Mac to navigate the complexities of lending in tribal areas. With Heritage One, lenders can also meet market demands for more financing solutions for a historically underserved market. And lenders can contribute to making housing more affordable and accessible throughout Indian country. Next slide, please. Now, let me share with you borrower eligibility for Heritage One mortgages. Next slide, please. Heritage One will be available for members of federally recognized Native American tribes. And to be eligible for a Heritage One mortgage, a member's tribe must either be listed as a participating tribe in HUD's latest Section 184 participating tribes list, or be entered into a memorandum of understanding with Freddie Mac. Therefore, all tribes on HUD's latest Section 184 list will not be required to have an MOU with Freddie Mac. And for a borrower to be eligible, he or she must be enrolled as a member of an American Indian tribe or Alaska Native village, and the tribe or village does not have to be the one within whose tribal area the home is located. We intend to use tribal membership cards as proof of membership. And at least one borrower must be an owner occupant, which means that at least one of the people taking out the loan must live in the home, and the home must be that person's primary residence. And for Heritage One, tribes are not eligible borrowers. Next slide, please. If you are a lender on the call and are interested in selling Heritage One mortgages, you must first obtain Freddie Mac's written approval before selling Heritage One mortgages to Freddie Mac. For a seller to be approved, they must have experience originating similar mortgage products in Indian country and must receive counterparty credit risk approval. For those interested, simply call 1-800-FREDDIE to start the process, or reach out to your account representative if you have one. Next slide, please. And now let me move into land and property types that are eligible for Heritage One mortgages. Eligible land types include tribal trust lands, allotted trust lands, and fee simple lands. And eligible properties include ones that are located in the tribal area of an eligible Native American tribe, a 1 to 4 unit primary residence, a manufactured home, a condo unit, a unit in a planned unit development or PUD, and a property with an accessory dwelling unit or ADU. Next slide, please. And now I'm going to pass it over to my colleague David to share with you product features of Heritage One. Next slide, please.
Great, thanks, Kat. So just to go over a few of product features on the chart that we have in front of us. There are no income limits, so there are no area median income limits. We typically do place some income limits on our other affordable offerings, but for Heritage One, we didn't. We wanted as many tribal members to participate as possible and take advantage of this new product. Loan to value ratios, as you can see, we have up to 97% loan to value ratio for mortgages secured by a 1-unit property, including Choice Homes. And Choice Homes is a specific type of manufactured house. I'll give a brief description of that in just a moment. And up to 95% LTV ratio for mortgages secured by a 2 to 4 unit property or a manufactured home that is not a Choice Home. For those that might be unfamiliar with a Choice Home, it's a specific type of manufactured home that the industry refers to as a cross-mod home and has many similar features as a site-built home. So it has to be multi-sectional, sometimes referred to as a double wide, and it will have higher roof pitches and has many similar features to site-built home. It will have perimeter masonry blocking, energy efficiency features, drywall throughout, and the home could have a combination of other features such as dormers, a porch, and an attached or detached garage, or even a carport. Additionally, a mortgage secured by a single-wide manufactured home is also eligible property type for Heritage One. And if you're interested in hearing more about the manufactured housing, the Freddie Mac is also participating in a session. Nope, wrong note, sorry. It is also for a 1 to 4 unit resident property. The loan type must be a fixed rate purchase, no cash out refinance mortgage, which is in line with our other affordable mortgage products and can also be used in construction for renovation mortgages. So it can be paired with a renovation product, such as Choice Renovation, which is for those larger scale remodeling projects, or our Choice Renovation Express for those smaller scale updates. For occupancy, at least one borrower must occupy the property as their primary residence, but we also allow non-occupying co-borrowers. However, for those 2 to 4 unit properties, all borrowers must occupy the mortgage premises as their primary residence. For property ownership, borrowers can own up to 2 financed properties, which includes the Heritage One properties, so no more than 2 financed properties. So Heritage One wasn't really developed to sort of bolster the availability of rental income properties, so we're only limiting that to 2 properties for the borrower. For underwriting requirements, when you run the loan through Loan Prospector Advisor, it should be an accepted risk class, and manual underwriting is also an option. Loan Prospector Advisor is our underwriting automated tool and provides you with greater certainty that the loan will meet Freddie Mac's eligibility requirements. Let's move on to the next slide, please. Or borrower contribution reserves. So there are no minimum borrower contributions from personal funds required. So for that 97% we saw on the previous slide and the 95% for that 2 to 4 units, the borrower doesn't have to come to the table with that 3 or 5% down from personal funds. They can layer in gifts and grants to make up the entirety of the down payment. Reserves are not required unless they may offset some other underwriting factor. And those down payment resources can come from a variety of sources. It could be a gift or grant from a parent or grandparent. Maybe the employer has a down payment assistance benefit that might be forgiven over time. Among the sources allowed, down payment and closing costs and reserves can come from agency provided funds where that agency is a Native American tribe. Gifts or grants can also be provided by the seller, as the originating lender, as long as that 3% of value came from the borrower's personal funds or eligible sources of funds. As long as that 3% is met on that 1 unit property, the lender can kick in additional funds if they have them. But the gifts or grants cannot be funded through the mortgage transactions. We don't allow premium pricing. Let's move on to the next slide. For homebuyer education. So at least one homebuyer must complete a homebuyer education program when all occupying borrowers are first-time homeowners. The education can be provided by the native CDFI, even if it's the originating lender or seller. Typically, that homebuyer education is provided by an uninterested party to the transaction, but in this case, we're allowing that CDFI to provide that as well. Some examples of some education curriculum would count for the homebuyer education would be Freddie Mac's Homebuyer U, and as well as I think everyone on the call is probably familiar with NAIC's Pathways program as well. So Pathways could be a qualifying homeownership education course as well. For landlord education, at least one borrower must complete a landlord education program, or they have to have at least 1 year previous landlord experience. Let's go ahead to the next slide for leasehold. So we're looking for a term of at least 25 years with an automatic 25-year renewal for the lease, or the lease we want to expire at least 5 years after the mortgage term ends. You may need to receive additional approval from the U.S. Secretary of the Interior or the BIA as applicable to extend that term beyond 25 years. We are recommending, it's not required, that you use the most recent version of the standard lease agreement form in HUD Section 184 program. You can move on. For appraisals, okay, so for market areas without sufficient number of comparable sales to develop a credible report, an appraisal that relies solely on the cost approach is acceptable under certain conditions. So this is a feature and enhancement for Heritage One that we made. So the appraiser must provide a well-developed cost approach and fully complete the cost approach section of that report. It must provide sufficient detail to allow the lender to replicate the cost approach as well, and in the reconciliation section of the report, an explanation of how that value was derived. If an appraisal is obtained, Freddie Mac will provide an offset credit to the lender, which has to be passed on to the borrower, which is another benefit of Heritage One. We've heard about the difficulty and how expensive it is of getting appraisals out to those more rural areas, and so we wanted to provide a credit back to the borrower to help defray some of that cost to get an appraisal out to take a look at their property. Next slide. And also, as Tani mentioned in her opening statements, we did work in collaboration with South Dakota Coalition and the Appraisal Institute to develop materials for appraising properties on tribal lands. So we took the materials that the South Dakota Coalition had developed for their market, and we expanded those for a nationwide rollout. And the Appraisal Institute is in the final stages of having those materials approved and set up for continuing education credits. And that should be completed very soon. And we expect to probably have a first course rollout by the end of the year, probably early December. You'll see some courses out there for this new appraisal curriculum. And I'll go ahead and pass things back over to Kat, who will go over some Heritage One servicing requirements. Kat?
Thank you, David. And let's move to the next slide. There we go, perfect. The servicing of Heritage One mortgage is standard until a delinquency occurs. If that happens, then there must be additional communication and notification requirements to third parties, including the tribe, the BIA, and any other required parties pursuant to tribal law and codes. Additionally, for a property inspection and property preservation, servicers must provide proper notice in advance of accessing the property in accordance with applicable laws. In addition, if the property contains Native American artifacts or remains, the servicer must work with the tribe or the BIA to ensure proper handling of them. The servicer is also highly encouraged to have the borrower complete an annual attestation of the property's current occupancy status. Next slide, please. And there are two paths for servicing Heritage One mortgages. The first path for servicing Heritage One mortgages is that the seller servicer will transfer servicing to a servicer designated by Freddie Mac, or the seller servicer may retain servicing of Heritage One mortgages, which requires Freddie Mac's explicit approval. Next slide, please. Regarding foreclosures, prior to referring to foreclosure, servicers must complete all required communication and notification requirements. Necessary contact information for the tribe will be obtained for servicers and Freddie Mac to work with the tribe contacts and to operationalize the additional servicing requirements. Foreclosure processing may proceed in the court that holds jurisdiction, which may include tribal court, and the tribe has the right of first refusal in accordance with the mortgage documents. And it's important for us to note that the original lender can provide post-purchase counseling at the time of delinquency. Next slide, please. And that concludes our presentation of Heritage One. We thank you for joining us for our presentation, and we are now going to pass it back to Imani, who will help us facilitate the question and answer portion of our roundtable. Thank you all so much.